What's up everyone, it's Caddy with Money Vesting. So in this video we are going to be talking about one stock, one company that reported earnings last night and they absolutely crushed it, knocked it out of the park, and they are now trading at an all-time high, pushing up over 15 to 16% on the day today. So we're going to do a complete analysis on this company. I've actually talked about this stock before. We've covered this on the channel a couple times, and we're going to do a calculation of the intrinsic value. We'll talk a little bit about the business itself and the technical analysis. Everything's going to be covered. As always, if you enjoyed this video, find it helpful, make sure that you drop a like, subscribe to the channel, and link to our Discord and Patreon is going to be down below. We'd love to have you on board. It is the first week of the month, so new month, first week of the month is the best time to join, so links are going to be down below. So company that we're talking about today is going to be Arista Networks, ticker symbol ANET. I have done videos on this company before, trading at a brand new all-time high, just under $180 per share and pushing up over 16% at the moment. Of course, trading at just under $180 per share, which is a brand new high for the company. So Arista basically is a designer for high performance, low latency, cloud basically hardware and software. So they are cloud providers. Arista's products are used in cloud providers such as Amazon Web Services, Microsoft Azure, and Google Cloud Platform. So those are some of the biggest customers for Arista Networks, and also other financial institutions like Goldman Sachs, Morgan Stanley, JP Morgan, Bank of America, and also a lot of government agencies as well. So Department of Defense, Department of Homeland Security, and National Security agencies as well. So they basically provide extensible operating systems. EOS is a Linux-based operating system that is designed for high performance and scalability, and it also open and programmable, which allows customers to customize it to their specific needs as well. So those are some of the customers, and they also, like I said, do offer a lot of other products and services. So if you come over to some of the other descriptions here, you'll notice that they do basically develop, market, and sell cloud networking solutions. The firm also involved in switching and routing platforms related to network applications. Again, founded and basically based in Santa Clara, California at the moment. If you take a look at some of the numbers that they just reported, 8% increase compared to the first quarter 2023. So quarter over quarter, 8% increase to $1.45 billion, but year over year, 38% increase. Gross profit margins at over 60%. Non-GAAP gross margins at over 61.3%. Net income at 491, almost 492 million, and that was about $1.55 per share compared to 94 cents same time last year, which is over a 60% growth on a year-over-year basis. And non-GAAP net income coming in at $1.58 per share versus $1.08 per share same time last year. So again, if you take a look at 6 months ending in June 30th, 2023, the numbers are just staggering. I mean, they speak for themselves. If you take a look at total revenue, up to $2.8 billion, up from $1.9 billion. And then we've got gross profit up to $1.6 billion, up from $1.2. And we got net income almost at $928 million. That's like almost doubling from same time last year. And EPS coming in at just under $3 compared to $1.80. So if you do 294 divided by $1.80, we're looking at a 63% growth on a year-over-year basis for the company in the first 6 months. It's absolutely insane numbers. And again, take a look at some of these bar graphs for yourself. I'm not going to talk. I'm not going to say anything. Just look at it for yourself. Very nice and consistent growth here from the company, going from like $361 million in revenue to over $4.3 billion. That's 12x growth in the last 9 years. Operating income gone from $66 million to over $1.5 billion. And again, profitable company with very stagnant share count, especially if you compare this from 2018 to where we are now. The share count has been very, very stagnant and consistently growing EBITDA as well, from 71 million to over $1.5 billion. Free cash flow also positive and growing with incredible margins. Got gross margins over 60%, EBITDA margins 37%, net margins at 31%. Very high return on capital equity and common equity, and of course assets as well, at over 20 to 30%. And to top it all off, they've got a pretty good balance sheet with negative net debt, with little to no debt. This is why I absolutely love these companies, where they have like over $3.3 billion of cash and debt of $55 million. Literally, my God. I mean, this is just perfect. I want to take a look at how much their total liabilities are. If it's under $3 billion, like this would be an absolute no-brainer for when the pricing is right. That's important to us. So if you take a look at the balance sheet here, we're looking at total liabilities. Oh my God. At $2.2 billion, and they've got cash which is 3.3 billion. So we've got more cash than all liabilities, and they'll still have cash left over. Very strong current and quick ratio. And valuation is actually not that high, like 27, 26 times earnings multiple, especially when you compare the growth rate for the company. And we've got price to sales running at a little bit under 10, and price to cash flow forward basis a little bit under 27. So, you've got a business which has consistently growing revenues, consistently growing gross profit, high margins, high return on capital assets and equity, strong positive free cash flow, EBITDA is growing, share count is stagnant, net debt is negative. We've got valuation that is reasonable. Again, it's not cheap, it's not expensive either, it's reasonable. We'll take a look at the valuation, of course, the intrinsic value in just a minute. And this is going to be that growth rate. Forecasted earnings growth at over 35%. Next year, 8%, then 11%, then 12.5%, then 6%. So if you plug in those numbers into our spreadsheet, what we get is a growth rate of a little bit under 10%. So it's not really, I wouldn't consider Arista Networks as a growth stock, even though this year it may seem like it's a growth stock because earnings are just absolutely ballooned from same time last year. They're up a lot. But if you kind of stretch that forecast out to, let's say, 3 years or 5 years, it's not really a growth stock unless things change, but it's consistent with about under 10% growth in the next 4 to 5 years. So if you plug in, let's say, 10% growth here and price earnings multiple, I go with 20, which again is kind of stretching it considering the growth rate here. And the discount rate is going to be 12%, 10% margin of safety. I'm going to go 0% in share dilution. And then also, if I take a look at the dividend, they don't pay a dividend yield. It is only a $55 billion company. We get a fair value at closer to $102. And right now it's trading at 180. So if we take a look at some of the numbers, right? So 10% growth rate is really what's kind of kicking down the actual fair value. So if I increase this number to, let's say, 14%, then obviously the actual fair value jumps to 122. If we go to as much as 16%, fair value jumps to under $133, which again is actually quite more reasonable, far more reasonable than, of course, low 100s. So this right here is going to be that sensitivity grid. And I know some of the comments are going to be like, Caddy, once again, we're going to have to wait for this stock to come down 20, 30%. We can't take action right now. Guys, that's the key to long-term investing success. Patience, discipline, allowing for the prices to come to us, having a watch list, having a list of stocks, having a list of companies that you believe are the potential like long-term winners, quality companies, and then just putting down your buy targets, right? And then waiting. Patience, discipline, like I said, allowing for the prices to come to us. That's what we do, right? Don't we have like wish lists for a lot of different things? Like, why do we wait for sales, Christmas sale, Thanksgiving sale, New Year's sale? Why do we wait for these days? Because we know that we're going to get very good deals for things that we really want, right? Why not just go out there and start buying every single day? Maybe some people do, but like a lot of people wait for those deals. It's the same concept. It's the same exact idea when it comes to investing in the markets. We have a list of quality companies, good companies that we want to buy, but at the right prices. So we wait for those deals. And with Arista Networks, I have no doubt it's a phenomenal business. Look at the overall price chart here. Consistent higher highs, higher lows, and it will give you an opportunity. You know what the beautiful thing is? That it will give you an opportunity. It's not like it's immune to sell-offs and drawbacks and of course bear markets and all those things. It has dropped 24%. It has dropped 23%. It has pulled back 27%. So it will give us the opportunity. It's just making sure that we understand. Of course, if you take a look at where it was just a few days ago at $147, and of course just a few months ago it was trading as low as 133. So yes, you could argue that was a missed opportunity. Back then it was, we should have been owning the stock, but that's why we do these analysis, right? Is to bring up some of those old companies that we've already analyzed. We've done most of the legwork. We've done most of the hard work. Now it's just doing the easy part, that is, executing on that trade at the right prices. So let me know in the comment section down below. What do you think about Arista Networks? I love this company, to be honest. Like, there's a lot of potential, lots of great things that I'm kind of seeing from a fundamental standpoint. But it's just about the valuation, of course, finding the right price on where to basically buy it. So hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Let me know in the comment section down below. What do you think about Arista Networks? As always, the Discord link is going to be down below. The first week of the month is the best time to join. Happy investing. I'll see you all in the next video.